Hello, everyone. It's a pleasure to be here. It's a pleasure for ECS to have this very important event entitled Strategic Growth and Spread of Startups into Africa, an Innovative Approach. Well, we always talk about Africa. Whenever Africa is mentioned, everybody talks about the potential. Everybody talks about its young population. There's a lot of talk, but the actual action is not as big as it should be and not as fast as it should be. We believe very much at ECS in the importance of Africa and the importance of having the development of Africa take place at the hands of its own people. Only Africans can actually develop Africa. Whenever we talk development and we talk young people, this translates immediately into entrepreneurship and the potential for entrepreneurship. And our session today is about entrepreneurship and about how to allow entrepreneurs to grow their business and to spread into Africa and how to get over the obstacles that they face. The panel constitution is not haphazard. It's very well studied. It has from Egypt an expert on entrepreneurship, Dr. Khaled Ismail. It has one of the biggest banks in Egypt that are of high interest in entrepreneurship and in Africa, Banque Misr, Mr. Mohamed El-Etreby. It has the international organizations that are very much African and focused on Africa, like Afrexim Banque. We have Dr. Robert Okola. We have also the CDC group in Egypt, which is rather new, but is of a very heavy weight, Ms. Shireen Shohdi. And last, we have the political weight of all of Africa, actually, represented in His Excellency, Dr. Labrang, Dean of the African Ambassadors and Ambassador of Cameroon in Egypt, and a great friend. And this actually comes before everything else. So it's a great pleasure to have all of you here. And we're going to start now. And we are starting with Banque Misr, with Mr. Mohamed El-Etreby, the chairman of Banque Misr and the chairman of the board of directors, Federation of Egyptian Banks. He's going to start with us. And because he has another commitment, he's going to pass the word to Mr. Hany Farahat. But please, Mr. Mohamed, let's hear from you.
Thank you, Dr. Abla, for this invitation. I welcome all the members. I will talk about the experience of Banque Misr in SMEs. We know that the Egyptian government and the Central Bank of Egypt has made a lot of initiatives for the SMEs in the last 4 years. We know the importance of SMEs for merging the informal market with the formal market. The working force of in SMEs are almost 85% from the total workers in Egypt. We know the importance of substituting products to ease the pressure on the reserves of the Central Bank of Egypt. So I will give you the experience of Banque Misr. You know, the Central Bank has made a lot of initiatives concerning the subsidy of the interest rate to be 5% for small and medium. And also, Banque Misr had a portfolio of 1.4 billion in 2014 on SMEs. Now we are talking about 40 billion total portfolio in SMEs in Banque Misr. The Central Bank asked all the banks to have 20% from their portfolio in SMEs at the end of last year. Banque Misr has achieved more than 23% in this portfolio. So if we talk about Banque Misr and about our experience in SMEs, we have exceeded the 20% set by the Central Bank of Egypt. Bank's portfolio as originally required by the CBE. In total, our onboarded clients of microfinance and SMEs have reached more than 195,000 clients as of August 2020, on which 52% are small business, 29 medium, and 19 microfinance. And our efforts in Banque Misr are not limited to just financing, but we try to set an example to the full spectrum of support services needed to support startup and SMEs. And amongst our experience in this area, I'm going to highlight key achievement. First, Nigerpreneurs Initiative. Banque Misr participated in Nigerpreneurs Initiatives launched by the Central Bank of Egypt, encouraging young people to break into the field of entrepreneurship and provide them with the necessary support to thrive in this field. Entrepreneurs design houses are units created within a carefully selected group of universities that help startup and small business create new products and develop existing ones to meet markets using the latest technology and resources. So far, we have 4 design houses in different universities across Egypt. Banque Misr has continued to support these units in all aspects. It has provided 300 hours of training in the field of product design, development, and simulation using advanced engineering programs. And we in Banque Misr take pride in that. One of our key achievements of that front, that NASA has selected one of these houses as a partner in manufacturing new pneumatic ventilator device called Vital. Business development services, Qatar's are hubs that simply provide business development, advisory support, services, and financial and non-financial solutions to improve the entrepreneurial environment and help SMEs. These hubs provide many services, including but not limited to origination of projects, idea project, feasibility studies, and access to finance. Also, it provides training services and workshop with the aim of building the capabilities to ensure the success of these projects. A key success of such centers was evident in how they help business maneuver through the challenges of COVID-19 pandemic and its implication on business and market. Second, Banque Misr has empowered Egyptian women. Banque Misr has concluded a protocol with the IFC with the objective of providing products and services, whether financial or non-financial, to suit women needs and to develop their business to maximize their economic and social contribution. This includes services such as bank account opening, cash payment, cards, insurance, training services, amongst others. So far, Banque Misr, under its SME and microfinance program, has provided credits to 41,000 female clients, extending more than EGP 3 billion in financing for women. And we are expanding on this front to empower female entrepreneurship as key part of our strategy. Third, Banque Misr collaboration with specialized institutions. Our bank role is not limited to financing projects, but it is extended to include provide training, courses, and workshops to our customers and educate them enough to successfully manage and expand their projects. Liaison with the specialized advisory firm to launch a training program for clients and investors in Alexandria, emphasizing how to market and develop sales plans along with other administrative aspects of the project. A protocol between our bank and the Egyptian Banking Institute in providing training courses for entrepreneurs across the country. Help our customers in marketing and attend internal and external exhibition in order to help them to display their products, such as Diarna exhibition and handicrafts exhibition in Italy, which benefited our customers in gaining global experience in their field. At the end, if we are going to talk about the Central Bank of Egypt, the Central Bank of Egypt, as a total banking exposure for SMEs, we reach over 200 billion, more than 200 billion Egyptian pounds, especially for SMEs. And all the banks in the last 4 years contributed in SMEs. And the subsidy from the Central Bank for the interest of 5% has encouraged the banks to lend to SMEs. So this is give you an idea the importance for Egypt for SMEs. And Banque Misr also participated in funds that they are dealing with SMEs, not as loans, but as equity. And we have participated in 3 funds only for SMEs projects. So this is give you a nutshell about the importance of SMEs for Egypt and what the central bank and what Banque Misr has done in SMEs during the last 4 years to grow from 1.4 billion in total loans, direct and indirect, to 40 billion in 4 years. So this is give you an idea about the importance of SMEs in Banque Misr and in the country. We know that SMEs is very important for the to merge the informal market with the formal market, and this will contribute in all our ratios when we are talking about our GDP ratio. I will give the floor to my colleague Hany Farahat to give also a view about what we expect in Africa concerning the how to improve the SMEs in Africa.
Thank you. Thank you, Mr. Mohamed.
Would you like to rotate the discussion before I talk a bit about Africa, or should we continue?
Yeah, no, actually, the focus by Mr. El-Etreby was he took the general view on the SMEs, and he mentioned a few innovative aspects like encouraging female entrepreneurship and having the funds and entering with equity. And this is critical in entrepreneurship because they don't just need loans, they need also equity. So he covered that part. If you want to add to the innovative initiatives, then by all means. And then most important, let's move on to Africa.
Sure. Well, I think the reason why we've spoken, or Mr. El-Etreby has spoken about SMEs, is that we think having a successful layer and a conducive environment for the growth of small and medium businesses is what really could encourage giving birth to successful startups. So if you have all the necessary requirements for startups to exist, but without the second chapter being ready for them to strive in the market, then it's a killer for startups. And that's why the focus of Mr. El-Etreby was on small and medium enterprises. Now, when we speak about innovative ways to support startup players in any African country, I think that having a right regulatory environment, the right financing structures, and the right legal setup that does not really block the owners or the founders of those companies to be part of the system is a key impediment. And I think that this is what has been shared by most of the African countries when we talk about startups. So you have most of the companies that are already existent in the continent have either been funded by private money, family money, coming as a result of the sale of assets and redirecting the income from that sale into the startup business, but it hasn't really capitalized on any type of financing that's coming in through either equity or debt. And I think the reason why is, as you rightly mentioned, it lacks innovative financial services and structures that are really tailored for small and medium enterprises, and before that, startups. First thing that we should do is focus about how to extend equity and debt to startups without really pressuring them with the usual process that other bigger companies are liable to. So when it comes to collateral, they need to be freed from any collateral commitments. When it comes to transaction costs and dealing with the banking sector, they need to enjoy minimal costs and not really compared to larger companies. We have seen in Africa so many challenges related to the geography of the nearest branch of a bank or a nearest financial institution in an area where startups are existent, but they have no one to talk to when it comes to financial services. And the same cycle applies on marketing, on administrative procedures, and everything related to taking that company into the market. So I think the starting point would be really focusing on how to innovate and develop financial structures that are suitable for startups and not necessarily aligned with what already exists in the market when it comes to other larger companies. So this is the first step that we need to consider and talk about. And I think Egypt has seen some of the successful examples that we in Banque Misr have capitalized on and have done already. And I think Mr. El-Etreby has already spoken about that pretty much. The second pillar, I would think, is very much related to skills, having a sufficient number of incubators that understands the requirements of marketing and the requirements of development for those companies, and the spread of it along with its existence in so many nations. So we have also a similar experience whereby we have centers in universities and in so many governments around Egypt that cater to advancing those businesses. They give them the knowledge, the know-how, the managerial skills, and how to deal with other formal institutions in the economy in order to grow and to strive. And the third component is definitely focusing more on women empowerment and female empowerment through startups and selecting good businesses that are run by women because of the high multiplier impact into the economy. So studies have proven that female owners of businesses tend to distribute their wealth on higher and more number of family members, and accordingly, this money is spent and circulated much better into the economy, and therefore it needs to be one of the area of focus for us to basically allow startups to strive. So I will stop at this point and allow the floor to Mr. El-Etreby to continue the discussion, and maybe and the members of the panel as well. Thank you, Dr. Abla.
Thank you.
Dr. Abla, sorry to interrupt.
Yeah.
I just came from the board. I forgot to tell you that due to the SMEs in Egypt, that concerning the financial inclusion, that from 3 years ago, the number of citizens dealing with banks was almost 15%. And now we are talking about 52%. Part of it because of dealing with SMEs, they were not dealing with banks, and now they are dealing with banks. So we increased from 15% to 52%, and this was a success story in 2 years ago only.
Definitely. Thank you very much, Mr. Mohamed. There are questions, but we are going to save the questions. As a moderator, I'm going to resist the urge of asking questions until everybody talks, okay? So that I don't make the mistake of taking too much time. Let me move on to Dr. Khaled Ismail, founder and chairman of Kiangel. What are the innovative ways of trying and helping out in strategic growth and spread of startups into Africa? Please, Dr. Khaled.
Thank you, Dr. Abla. And, I'm glad to be on this prestigious panel. As an angel investor and a fund manager in Egypt, I've been investing for the last 9 years in 23 startups in Egypt. Alhamdulillah, most of them very successful. Actually, some of them have made the news. Some of them won global awards on the global scale, not competing regional or continental, but global. So that gave me a very good insight into the capabilities and so on. I'm glad the Banque Misr and Mr. El-Etreby and Mr. Hany covered the SME part very significantly, and it's in my mind the driver, the engine for job creation and so on. I'm more focused on startups that make the news, that become, unicorns, that show tremendous growth. And it's not either or. I think you need both kinds of startups, the ones that have their limitations, I would say. So they will, by design, stay small or medium, but they need to survive, grow, create jobs. They create most of the jobs. They are really very important to the economy. But then there are a percentage of those who don't just limit their scope or their ceiling is so high, the sky's the limit. They want to conquer the world, basically. And those are the ones that I'm personally very interested in. And we do have very good ones in Egypt as well as in the whole continent that have proven, to grow very fast. Fawry, for instance, just became a unicorn, which is the first unicorn in Egypt valued at $1 billion. And it was 15 years ago a startup. So my focus is what are the problems with these kind of startups, entrepreneurial startups, and how we can grow them. And the first initial issue that we saw very quickly is that our markets in Egypt as well as in the continent are independently very small. So Egypt alone or Kenya alone or Rwanda alone are very small markets on the global scale. Just to give you a flavor, the economy of Spain is as big as half of the economy of the entire African continent. And Spain is not one of the top 4 or 5 economies in Europe. And it's not US for sure. So what that told us is that any startup that wants really to grow big and make the news and become, a success story needs to go beyond borders in most of the cases, because every country on its own in Africa, even the biggest economies, Nigeria, Egypt, South Africa, they're still small on any global scale. Even worse is that most of these countries have very strong city models. So Cairo or Lagos or Nairobi. Once you get out of the big cities, the economy is even much smaller, and the distribution of goods, the services, everything becomes much more difficult, to the level that most of the startups are clustered around hubs in cities, and in very few cities, I would say. So all of that was the problem that we started to think about. And we came up with an interesting concept or model of a new fund. I'll just start sharing my screen, if you allow me. We called it GIAF. GIAF stands for Grow in Africa Fund. And the purpose of the fund is actually to drive entrepreneurship in the continent and help startups grow, not by words, but really by action. So the concept is as follows. Instead of every time you invest in a startup, you start from scratch, taking the risk and so on, why not look at the existing startups in the continent who have already established their own country model or city model and have proven it. So any startup that is in Cairo or Nairobi or anywhere else that has proven that it can produce its product or service and can sell it, and there is demand and so on, but still lacks the market size and the growth, we analyze the product, we analyze the problem it is solving. Then we do a very thorough analysis of all the other African countries that may need exactly the same product. And then we look at which of those have the right population, have the right, economy growth, have the right conditions in general, and handpick, 3, 4, whatever the number of countries where we help this single startup expand into. So all of a sudden, instead of operating in Egypt alone, in 1 year or 2 years, it's operating in Egypt and Kenya and Rwanda and Uganda, and so on. So we help grow markets very fast by virtue of reducing the initial risk of product market fit, because the risk is always there at the beginning, very high. What if the product is not good? What if the market doesn't accept it? What if the pricing model is wrong? All of that. We bypass all of that by handpicking the right startups to start with and focus on the strategic growth in the other markets. So that is one advantage of the concept of GIAF. The other advantage is we still have a discrepancy between certain low-income countries in Africa and other countries. Certain countries are much more advanced in technology and implementation and innovation and entrepreneurship than others. And by virtue of opening borders to startups to move from one to the other, it is actually going to benefit the lower income countries by bringing in homemade, African-made sort of entrepreneurship and technology and grow it in their countries. But while growing it, it allows, cross-fertilization, it allows creating jobs and so on. If you look at what foreign companies do, the Google and the IBM and the like, when they come to our countries, they want to just sell. They want to make money. They are not that interested in starting companies and creating jobs and growing the economy. So what we're doing is actually a home-built Africa for Africa, and that concept is very important. And by virtue of allowing companies to grow into bigger markets, if they are, let's say, a very successful, very bright idea and company in Rwanda or in Burundi, the market is so small in these countries because the whole population and so on. If we allow them now to move their product to Egypt or Nigeria, they will all of a sudden experience a 10x growth. So the whole concept is based on this growing from one country to several countries, handpicked, selected. It's a case by case, so it's not one size fits all, like every Egyptian company has to go to Saudi, or every Egyptian company needs to establish in Dubai. This is what most of the startups would tell you today. If you tell them where you expand, Dubai or Saudi. It's actually very incorrect because the demographics in the Gulf are very different, while the demographics in Africa are quite similar. So we see the true expansion and possibilities coming more from the African continent than from, the Gulf, for instance. Now, what do we offer? Obviously, if you want to expand, you need funding. So we heard what Banque Misr did in terms of availing money, either direct loans or even investing in funds and equity. Startups that we talk about that has tremendous potential and growth typically require investments in equity until they grow enough and they need working capital, and then we advise them to go for loans. But one way or the other, the concept of the fund is to avail the money needed for them not to continue their growth in their home country, but focused on that money going into the expansion into other countries. So all the money will go into the new ventures that they will do, which are sort of greenfield, but in a way tested already by virtue of the history of the company and its proving track record. But we, over the years, in 9 years of helping startups, what we found out is that money is actually a small component. And I'm very honest here, although what we do is financing, but reality is, if you give money, and particularly if you give too much money to startups, it's a recipe for failure. They spend, they don't know what to do, they don't know how to, rationalize all their spending and so on. And they don't know how to expand, they lack experience, and et cetera, et cetera. So we found out over the years that you need to stay in touch with your startups very closely by continuously mentoring the founders, the entrepreneurs, supporting them financially, but also strategically, marketing-wise. Most of them don't have the real market knowledge and insights and so on. They need partnerships, and because most of them are young, they knock doors and the doors are shut. So if they want to walk in court office and so on, typically the answer is you're not welcome. But we as a fund and manager have always partnerships, private sector, just name it. There is always a local knowledge that is needed. Without it, you will never succeed in a new country. You may fall into real traps that kill you, actually. So what we do is, as GIAF, we have also an office in Nairobi, and we hire people on the ground in every country we go to, and we insist wherever we invest. Let's say we take an Egyptian startup, we grow it in Rwanda. We insist that there is a co-investment from at least one Rwanda investor, somebody who invested before us in Rwanda, who has the knowledge of the market, the relationships, and so on, should come along and co-invest with us. That's a must as an essential ingredient of the fund. So by putting all of these four major components together, we sort of guarantee the success of the growth and ensure that these companies can grow very fast. Now, what does it entail when you grow very fast? It entails, of course, higher revenues and so on, but also you become a much more attractive target to acquisitions or exits. And if you look at historically, the companies who made it in the region, Karim, Souk, Jumia, and so on, none of them managed to do their exit before expansion into multiple markets. So each name that I mentioned right now was in 7 to 8 markets before they got acquired or they went public. And that's because they cannot reach the size that makes them attractive to an IPO or to an acquisition without really having multiple markets that bring their value and numbers up. So maybe for the sake of time, I'll just jump a little bit faster. The fund that we're establishing is actually a $35 million fund. And the purpose of it is this growth in Africa. And we believe that with this amount of money, you can do amazing things. We invested in 23 companies. At least 10 of them are really doing great job in Egypt, and some of them have gone regional, and we will see 2 examples after I finish. And all of that we did with $3.5 million. So imagine with $35 million, how much you can do and how much growth you can create. We've created over 1,200 jobs. The companies are currently valued at $70–80 million, and we only invested $3.5 million to enable all of that. So this is very important for startups. We thought originally of limiting the traffic of GIAF. Ideally, we'd like to go from one African country to another. But of course, that is very ambitious and too big. So we said, let's focus on a given number of countries in the first fund using the 35 million. And once proven successful, we will expand to all countries. So our initial take is the countries are Egypt, Sudan, Kenya, Tanzania, Zambia, DRC, Uganda, and Rwanda. For obvious reasons, because they are all or mostly all COMESA countries, Nile Basin countries. There are direct flights. Most of them are growing economies, very promising opportunities, and so on. Most of the startups will be Egyptian startups. 80% will be Egyptian startups expanding into these countries. 20% are allocated for startups that come the opposite way from any of these 7 countries coming and wanting to expand into Egypt, where we will handhold with them and grow them in Egypt. So it's a mutual benefit for all of these countries, for all of these startups. And in summary, what we're doing is we're lowering the entry level risk that typical VCs suffer from, because we don't start with high risk startups. We hence create potential for very high returns, because we get low valuations on greenfield companies in new geographies while lowering the risk. We go for high impact sectors. I forgot to mention that our focus is on health tech, is on waste management, is on agri-tech, really serious domains that Africa needs very badly. And most of the VCs overlook in return for looking at high tech and things like that. We look for areas that really contribute significantly to jobs, to developmental aspect, to social impact, but as well as to financial benefit and economical benefit, without neglecting the social and environmental aspects, such as green energy, such as recycling, better health for the people, all of these very important aspects. I will stop here to allow my fellow panelists to say their words, and then we will be open for discussions. But before we move to the next speaker, I think we have 2 videos about 2 startups that we supported in Egypt, but they already managed to expand with very little effort into Africa. One of them does teleradiology and is currently, besides Egypt, is in Kenya, is in DRC, is in the Maldives, is in Saudi. But Kenya and DRC are very big markets for it, offering something highly needed in Africa, which is teleradiology. The other one manufactures filling production lines to fill any dairy products, and they have had very successful journey in Egypt. And recently they got demand to export their production lines to Kenya and to Uganda. So we'll get 2 videos from those 2. And these are really the models that, make me very, very positive about it and ambitious that GIAF can do wonders with very little money. Thank you very much.
Thank you, Dr. Khaled. Walid, please put the videos, please. Each one is for a couple of minutes, but they're actually very interesting cases.
Hi, everyone. My name is Mohamed. I'm one of the co-founders of Rology, and I act as Rology's Chief Product Officer. And for the next few minutes, I would like to tell you really quickly about who we are, what is it that we do, and why we have been targeting the African market. So what we do is we solve one of the main problems facing the African medical sector right now, which is the shortage and misutilization of radiologists, which in turn causes a high latency in reporting time. Radiologists are in great demand in Africa. There is, for example, only one radiologist for every 250,000 Kenyan citizen. There is only one radiologist for every 1 million Ethiopian residents, and on average, there is only one radiologist for every 730,000 African citizens, excluding Egypt and South Africa. And while radiology is one of the most important medical sectors right now, it is, in our opinion, misutilized. I want you to think really quickly about the last time you have been to a hospital, whether it's for yourself or a family member or a friend. And I'm willing to bet that none of you had any face-to-face interaction with a radiologist, despite the fact that I'm also pretty sure that almost all of you have made it through the radiology department, whether it's for some X-ray, for a fractured or a broken bone, or for something more serious where you go undergo a CT or an MRI. And the reason for this is because radiologists are known in the medical field as a physician's physician, doctor's doctor. They have zero interaction with patients. In fact, the role comes after the patient leaves, where they get to work on the scans of the patient using their workstation, where they study the exam and then write the diagnostic report for the treating physician, telling him what is happening inside the patient's body. And despite the fact that they are physician's physician, despite the fact that they have zero interaction with patients, they are expected to physically go to the hospital and work there the same way a surgeon, a pediatrician, or oncologist, or any kind of other doctor would do. And we think this is doesn't make any sense. This is why we have came up with a very, in our opinion, elegant and simple solution, an AI-assisted teleradiology platform. And what our platform does is it matches between the cases coming from the radiology department from the hospital with the optimum radiologist to report it. We do this remotely, we do it instantly, and we do it based on two important factors: the subspeciality and the availability of the radiologist. We also give the radiologist AI tools to help them increase their productivity. Our technology is built for the African continent. It uses zero servers or hardwares of any kind. It has zero setup cost. It can be used and accessed through a regular PC or a laptop. And all is needed is an internet connection, very much like the one you're watching this video on right now. This offers a lot of values for the hospital and for the radiologist. For the hospital, it offers them a fast and accurate diagnostic report. It offers them a lower cost structure. It gives them the ability to cover all different subspecialty of radiology. There are 8 different radiology subspecialty and zero setup cost. For the radiologist, it gives them flexibility. A radiologist can work from anywhere at any time. It gives them an increase in income, and it gives them the ability to help patients in many different places, not just the patient who goes through the hospitals in their city. The platform works in 3 main steps: upload, the hospital uploads the scan, match, we match it with the radiologist report, the radiologist receives the scan and write the report. We offer all our clients a fast and accurate and on-demand medical reports at any time. We work with more than 84 hospitals, and right now we have helped save more than 100,000 Africans. And we would like your help to serve many more. We work in Egypt, we work in Kenya, we work in the DRC, and we work in many other places. And when it came to AI, for the COVID situation, we have come up with a very elegant solution, an AI model that can detect the COVID-19 in CT scans, and it is actually right now performing at a higher rate than a human radiologist. While a human radiologist might need a few minutes to diagnose a COVID-19 scan, our AI model needs only a few seconds and can triage the workload of the radiologist based on the presence of COVID-19 in the scan or not. We have a team of 26 persons that cover the technical, the sales, and the medical aspects, of course, and we have a wonderful board members consisting of Dr. Khaled Ismail, Mr. Sheguru Handa, Mr. Amra Abdallah, and Mr. Khaled Sharbatli. Thank you so much for your time, and please, if you would like to help us in our mission of saving the lives of the African patient and offer them the medical service that they so rightly deserve, please reach out to us, and we look forward to hear from all of you. Thank you and goodbye.
We're going to put the second video. Please, Walid.
maybe worth mentioning until the video is on that one of the co-investors in Rology is AAIC, which is a Japanese Africa Health Fund. So Japan set up a fund to invest in health in Africa. And that's what I meant. We should be doing that homegrown African money, African funds, rather than waiting for, funds to come from abroad. Of course, there are a lot of DFIs and people and organizations interested in Africa, but we should take the lead on that. And the fact that the Japanese came in and invested in Rology is actually a very positive indicator from my point of view.
Absolutely, absolutely. Okay, second video, Walid, please. Thank you very much. This was the second company.
Again, mentioning this company, the designs you saw are homegrown from scratch, designed and made by Egyptian engineers talents from Mansoura. Most of them graduates from Mansoura Mechanical Engineering. I decided that they should stay in Mansoura. They should not come to Cairo. And that was very wise. They have access to the best engineers. It costs them less. They have a huge market in the Delta area. And that's how they started. When I invested with them, they were doing 80,000 pounds a month of sales. Now they are doing over 3.5 million pounds of sales per month. And they are exporting. And it's a magnificent, story of Egyptian engineering being able to produce machinery that costs about 10 times more if you would import it from Italy, or 5 times more if it would come from Turkey, or same price from China, but much better quality, produced here, better stainless steel, better everything, and better technical support as well. So I hope those two models that we saw, one from health tech and one from manufacturing, gave you a glimpse of the potential. It's not to show you that these are successful companies, it's to show you that they can really grow into Africa, huge markets, huge potential, and that's what we wanted to prove here through these two case studies. Thank you.
Thank you, Dr. Khaled. Very, very, very impressive. It's lovely to see young people coming up with ideas and projects that have the potential of being huge and of competing in terms not only of price, but price and quality as well.